Hello everyone, how's it going? In this video, we will talk about Lucid Motors, trading under the ticker symbol LCID. It has been one of the most speculated stocks in the Nasdaq over the recent years. Some have said that it is the next Tesla. Others believe that it's gonna be a giant bubble and that's it. But regardless, everyone would like to see the company doing well, at least in the short term, to profit from it. So as one of the heavyweights in this industry, Lucid is also one of the few companies actually with a few cars rolled out. As time went on, the stock price action, along with the hype and hopes from the investors, went through some huge roller coasters. Many till this day are still wondering whether this is a bandwagon they want to jump on. So in this video, we will look at Lucid and see if the company still deserves to have a place in our portfolio. Before we begin today's topic, I'd just like to state a brief disclaimer. My videos cover my opinions on the current events and what's likely going to happen in the future. They're not investment advice and should be watched for entertainment purposes. No one can predict the future with certainty, just our best guess of what might happen based on what we have on hand. My videos are prepared either immediately before the uploading or a few days before they were released on YouTube. Some of them may no longer correspond to the latest price action though. Nonetheless, they would still be relevant to provide some kind of analysis to the subsequent price tendencies and improve the decision making. Also, the videos aim to cover the securities as broadly as possible by covering the fundamentals and technical aspects. Other than the price action and the latest news events, the long-term tendencies, shareholder composition, fundamentals, and other market behaviors will also be covered, as they all affect the decisions about if we should buy a security, how many should be bought, and whether it should be bought at the current price level. With all that being said, let's begin with today's video. Lucid went public in the height of EV craze in late 2020 by having a reverse merge with the SPAC CCIV. The market was very excited about this event because it would mark the beginning of a new era for many shareholders who want to purchase an EV stock at the early stage. Back then, Tesla was making one historical high after another, and it seemed that no one can stop the bullish tendency. People were in a mindset believing that the bull market is never going to end, because it hasn't really changed for almost 15 years at this point. The only true alternative for Tesla for this time was NIO, and investors were looking for a domestic company with better oversight and perceived safety about their investment. Now, Lucid was going public in 2020, but it was a company with more than a decade of history and development behind it, and was able to prove to the industry that it is here to stay. We have to remember that the market mood was euphoric back then, and there seemed to be no obstacle that lies ahead of us. Of course, the reality was somewhat different. The current price action acts both as a major cool down of the market as well as an opportunity for more sustained development going ahead. Over the past few trading days, the share price of Lucid stabilized around $7, with some attempts to get back to $8 but without success for the time being. The stock price remained under sell-off pressure, partially because Lucid recently went through a round of capital raise around $1.5 billion, most of which is done through private placement or sovereign wealth funds. Regardless of the format it took, the fact of the matter is, shares were exchanged for money, meaning that there will be some dilutions to the existing shareholders in exchange of the better capacity to prepare for the next year, as Lucid embrace the probability or the possibility for a significant production overhaul. The current tendency remains bearish overall, as Lucid went down by more than 10% over the past 5 days. Now, if we look at the long-term tendencies, it's not difficult to spot that the bubble that gave so much hope to us, the traders, has now bursted. On the other hand, the market doesn't want to persist on believing that a bull market based on the assumption rather than actual production results or, a great-looking perspective brochure is going to suffice. It simply cannot afford to sustain this trend any longer when so many serious issues are bubbling up to the surface, so the narrative can no longer continue. Market predicted that there will be a bearish market after such a prolonged bull market, and that most shareholders believe that it's going to be a rough patch for at least a few years. The market has peaked twice in the past, and if the first peak was caused by pure hype, the second one was triggered by the rollout of products, cars. Lucid remains a company that has an investment value for the years to come. The main question in everyone's mind is, when should they enter in the stock? The long grind to lower price levels is likely caused by market trends at this point. So in that sense, things are not as alarming as they may seem. But we gotta remember that sometimes those lower grinds, like even without an actual fundamental reason, they can still last for a very long time. And they can bring the stock to a very low level. So Hyliion and PaySafe are good examples to showcase this phenomenon. When we take a look at Lucid's financials, we can see that the company's profitability remains to be improved. It's good to see that, it grew from 97 million in Q2 of 2022 to 195 million in Q3 of 2022. On the other hand, the cost of goods sold increased as well from $292 million in Q2 of this year to almost 500 million in Q3. It is also interesting to see that the cost of goods sold increased as well, but more slowly than the revenue, meaning that Lucid has been trying to control its expenses. Nevertheless, there are improvements to be made going forward. Another element observed is the operating expense. I think that those correspond to the fixed costs, and over the quarters, they haven't fluctuated significantly along with the production volume. This is a good sign for the company. Now, of course, in Q3 alone, they lost about $700 million, which will add up if we annualize the losses from one quarter to another. So for the cash reserves, Lucid has a lot of cash on the outside, but if we think about it, large expenditures are due very quickly, especially with operations that are still losing money at the moment. So based on that, we cannot completely rule out the possibility of further dilutions in the years to come. And actually, speaking of which, we just had one recently, right? So in that sense, I think that we got to be careful about the future outlooks. As long as Lucid is losing money on paper, this will keep being an issue. In terms of liabilities, the debt that Lucid took on over the past few quarters has also gradually increased in size, from below $2 billion to above $4 billion in Q3 of 2022. The liabilities provide financing to companies to keep the operations going. With that being said, they also have obligations that come along, especially the one of repaying part of the interest expense and the principals. If the company failed to comply, then they would be considered as insolvent, and then the company would be liquidated. The investment in its equity would be substantially discounted. For the moment, I consider that the increase in debt level at Lucid is normal. It is justified by the natural growth of its operations. With that being said, it's also something that we have to keep an eye on because it may involve the going concern issues and the cash flow stability going ahead. Some additional relevant aspects concern the current ratio and the inventory turnover for Lucid. The current ratio defines the liquidity of Lucid's assets and how well they can meet the short-term difficulties. The number has been going down over time, suggesting that Lucid will be short for cash or equivalent assets in the subsequent periods, so we cannot rule out the possibility of further dilutions, like I said previously. The inventory turnover, on the other hand, is a measure of how quickly they can sell vehicles. So the recent statistics demonstrate that Lucid has no difficulties in that sense, which is a testament of Lucid's brand power. Overall, Lucid's financial figures paint a picture of a company that is growing in its operations but lacks a little bit of discipline in cost control and needs to scale up its operations to start having positive operative cash flows. Now, let's also talk about the shareholder composition, because it's also something very important to determine what should be our trading approach. Lucid is currently held by institutional buyers for above 71% of the total float. This means that the price volatility of Lucid would be relatively lower than other growth stocks. Now, if it were owned by retail traders, it would be a lot more volatile, of course, because they tend to enter in and out very quickly, sometimes on a whim. The reason why they might be the case is because institutional shareholders have more diversified portfolios, so they don't mind short-term volatilities. They also tend to stay in a stock for a longer period of time, which is also a good sign for those of us who want to stay in the company for the long run. Now, regarding the short selling pressure, Lucid has a sizable short position, about 5.2 million shares, corresponding to about 22% of the total volume. The volume of short positions can help us understand what some market participants think about Lucid, and if there's a concerted shorting operation from the institutional owners. In this case, I think that the short sellers are anticipating the stock going lower due to market trends. There might be some real potentials for a short squeeze, but the overall volume for short positions suggests that there is a substantial size of people believing that things are going to go worse before they get any better. It doesn't mean that this is a concerted operation. If the market trend turns, I think that much of these short positions will be redeemed and will also be a second wave of additional demand. So overall, my recommendation regarding Lucid is that I think that Lucid is currently testing the bottom of the trend and also the bottom of the recent downward pressure. And there are some decent chances that the bottom is around the $7. The current assessment of how Lucid would be approached is that Lucid is having a relatively low volatility and high institutional ownership, both of which is considered to be good for the long-term investment. I would therefore recommend to start building positions now or to add to the existing exposure in Lucid shares and to gradually add more shares in the next 6 months. I would recommend to keep the exposure between 3 to 5% of the portfolio.